no past. Doing it all night, all summer. Doing it the way I wanna.
What is going on, fellas? Today we are going to go over this beautiful W trade we took on NQ. Went in with 2 micros, and this is the first trade recap we're going to be doing in a little bit because I was traveling in Europe for my birthday with a bunch of buddies, and this last weekend I went to Nashville with my family and girlfriend. Amazing time. Let's look at the P&L or the performance over the past 2 weeks. I haven't been able to trade really too well or like in really good conditions because I was either like on a train or on a plane or walking around the city. But we were able to do something. This first week I just took 1 loss on Wednesday. I think this was a pretty shit week though. And then this last week I took 2 wins and a loss. This one was in Nashville, then this one was on a plane, and then this one was on a train. And then today we smacked a nice dub. I don't know why it's not loading. Resync. Add a trade. It says synced. Well, it takes a little bit to load in here. Alright, now here we go. So there's that. There is that. But let's go over this trade. Let's just go over this trade. Pretty nice trade. Let's start on the higher time frames. And let's just go into replay mode so you guys can see what I'm thinking. Alright, and I'm also going to be taking screenshots from my journal while I do this, so I can just bang this out all together. But higher time frame, I see that we are in these 4 hour gaps, and I basically just have a bearish bias. Yes, we could get long setups here, and we did actually get a long setup, but you gotta look at the higher time frame. What is the objective for the day? What is price trading higher for? I just don't see any drawn liquidity higher that's worth risking money, to go higher. But if we look lower, we have these equal lows on ES on the 4 hour, and we have these relative equal lows on NQ, right? And then if we go down a step further, so I'm just going to try this. And if we go down a step further, we have this drawn liquidity right here being this hourly SIBI right here. So my 2 draws on liquidity were either find a short to this hourly SIBI, and if not, then find some sort of entry to these lows down here. But that was my bias for today, and I really wasn't going to switch it. I was really really turned off from longs, and the reasons are because of what I just mentioned, the lack of draws on liquidity higher. But as we go into market open, what is this, 9, 15, 20, 25, 30. Alright, so market opens, and what do you guys see? We end up dumping, right? We end up respecting this 4 hour SIBI, and we look like we're flipping down to take out this drawn liquidity being this unmitigated hourly SIBI. We see that price is clearly this displacing through these bullish gaps, and what do? We create a nice 5-minute SIBI. Now I'm gonna erase this 4 hour gap, but we know that we are resting in a 4 hour SIBI, right? We have an unmitigated target right here. We create a 5-minute bearish fair value gap. Now, what I'm waiting for at this point is a retracement to that gap, and then catch shorts to that unmitigated 1 hour. That is my idea, and what ends up happening, we end up retracing into that 5-minute gap, and this is why this is what was really kind of sketchy about this trade, and I got kind of lucky, was because of this SMT. So a lot of people probably took this long right here. We have an SMT in an hourly, we're reacting off this hourly gap on ES, right? SMT, and then we get this 5-minute flip, right? A lot of people probably took this trade, but reason why I didn't take it is because there's no draws higher. You're taking longs into what? Into a 4-hour bearish gap. Like, yeah, it's a beautiful entry, and if that entry presented itself and we had some sort of target higher, I would be very confident in that setup. But there's just no reason for us to go higher. This could easily just be the high of day, and then we just dump down to my actual like targets, you know. But I faded that long setup, and I'm also fading these 15-minute bissies. And this is what is very important too, because in the past I wouldn't even take a short if I see us reacting off this this gap right here. But what is more important, right? What is more likely to hold? This 15-minute gap or the fact that price is drawing towards this target? Like, for me, the draw on liquidity, right, in this 4-hour gap has more power and has more weight than this random 15-minute BISI. So I'm not going to miss out and just fade my entry just because we are reacting off this gap. This gap doesn't really mean shit, 'cause it's not really protecting anything. There's no protected low, or there's no real like significant low that created this gap, right? This is just a random 15-minute continuation gap, which, yeah, it could hold. A lot of the times it does work, but you got to use these things in context. So in my opinion, this gap was way more significant than this 15-minute BISI. This SIBI right here, this 5-minute SIBI, was sponsored by this 4-hour gap right here. So it's a higher time frame PD array that caused this big leg down. And then we also have aligned targets. We have this hourly unmitigated BISI here as our target. So at this point, I see us trading to this 5-minute. I'm just waiting for a bearish inverse to give us the entry. We end up creating this 3-minute BISI right here, and we end up getting that inverse right there. Now this trade, if I market executed at the body closure, would have been less than 0.1 R. So I just waited and had my limit. I set I just market executed on the next candle, and it's pretty crazy. This next candle straight up almost stops us out, and I was like, fuck, this is like, I knew what's it called. I was like, damn, this is about to be a loss. But we get really lucky and price just straight up reverses. Now I think this is I don't think this was random at all. Like, in the past 3 weeks, I've literally almost gotten stopped out on pretty much every trade. Price has retraced into my wick. That's why I am very, very, very anal about my stop loss placement being at these wick highs, because a lot of the time these wicks act as a PD array to support your price. So price retraces into these wicks right here, and then we finally get that nice displacement move lower. Now ideally I do want to see some sort of sweep right before getting that 5-minute SIBI. So like, if this happened, I'd be way more confident in this trade, but I'm still not going to fade the entry just because of this target being so strong, right? And yes, people can even argue that, but ES already took out that 1-hour gap. Like, why would you continue to trade? Why would you continue to be bearish even though ES already hit this hourly gap? And that's a good argument. I would agree with you if we didn't have all of these other bearish targets. This hourly unmitigated gap is just the first presented draw on liquidity. There are multitude of bearish draws, right? We have these equal lows, we have all this trendline liquidity, we have all of these trendline lows that I think are going to get taken. I'm not going to not take shorts just because ES hit the first draw, right? Because I don't expect this BISI to hold anyway. If this BISI was if this bullish gap was some important gap that I thought was gonna deliver price or hold price, then yeah, of course I'm not gonna take shorts into that gap if we already hit it. But I don't expect this gap really to do much, so that's why I was still comfortable with taking any short entry to that gap. Now, obviously, we are building a lot of trend line, low resistance liquidity here, but at this point, I'm out of the trade, so there is an argument for longs from here, and it looks like we did get an entry, long entry. Actually, I have to still take that screenshot. I fucked up. Hold up, boss. Hold up. Where? Let's type this out. 3-minute short out reacting from 5-minute Civi, which was sponsored by 4-hour Civi, and just targeting 1 hour unmitigated Civi. I mean Bissy, damn. But that was my trade idea. We ended up smacking on it for around, what was it, 390 or something. Oh damn, we got signed out for what? Oh, yep, we smacked it for around 390. And yeah, just happy overall with this trade. I'll see you guys in the next video. The balance is at around 5,100 now, I think. So we are just chugging our way along, you know, risking $300 per trade. I would need, for me to be able to get a payout, I think it's 10R, right? Because I want $3,000 balance. $3,000 divided by 300 is about 10R. So I'm just going to keep on trading my model, and once I hit that 10R point, I know that I have the skills to be like extremely profitable, because if you can achieve 10R risking like a small amount, and you're able to achieve 10R consistently over a couple months, that's very good performance, right? And yeah, you could just have a win streak here and there. If you're risking heavy, you could get to that $3,000 balance with 1R, 2R, right? But I want to get there risking $300 for a purpose. I want to get there. I want to achieve 10R just to prove to myself that I could actually outperform the market, right? It's a skill set, and just betting heavy on a couple setups, good setups, that is a good prop firm method. But in the long term, I want to like actually have the skill of trading and use good risk management, because I want to trade a fat live account one day, and I don't want to just build a habit of waiting for one good setup and then just smacking on it and not knowing what my P&L could be, not knowing what my actual like risk to reward could be if I have a static risk amount and just trade my model. But yeah, this is like a lot of the reason why I'm risking $300 is just to build the confidence and collect data. But that was the trade for today. See you guys in the next one.